convener of the SRC ICAP. We begin our program from the recitation of the Holy Quran. Bismillahir Rahmanir Rahim. Qul huwallahu ahad, Allahu samad, lam yalid walam yulad, walam yakul lahu kufuwan ahad. As you know, this seminar is to discuss the challenges that are being faced in the implementation of the new audit report. Giving you a little background of this, ISA 7000 series was revised by IFAC in January 2015 with effectiveness for period ended on or after December 15, 2016. The ISA report now covers additional management responsibility for assessment of going concern assumption, further additional responsibility on the auditor to conclude on the appropriateness of the going concern assumption, enhanced description of the responsibilities of the auditor. There are key audit matters now, which are various aspects will be discussed in the presentation, and a statement about the auditor's independence and the auditor's fulfillment of relevant ethical responsibilities. Recently, SCCP has also issued the Auditor's Reporting Obligations Regulations 2018, White SRO 558, 18 April 26, 2018, and as per the same, the revised audit report has become effective for the financial periods ended on or after June 30th, 2018, that is in Pakistan. As per the SCCP format, the specific opinion from the auditors are required in addition to the ISA report contents pursuant to Section 249 of the Companies Act 2017. Today we will be discussing the illustrative audit report as per the SCCP SRO, and the presentation will also be covering the ISA contents and the contents required pursuant to the Companies Act 2017. So the program format would be, there will be a presentation by Arsalan Khalid. Arsalan is a partner in EY Fort Roads, an SRC member and also the National Professional Practice Director of EY. And thereafter there will be a panel discussion. The session chairman would be Farooq Rahman. So without wasting further time, I would like to invite Arsalan. Please, Arsalan.
The timing of this seminar is very important because we are just entering into an audit period where a paradigm shift in the audit report is being seen. And 30th June 2018 reporting in terms of the auditor's report will be on a new standard, and the kind of audit report that we have now to implement is something as big a change as about a 100-year practice change, because I think the current version of audit report, which is a true and fair view and a short form audit report, I think is in practice for more than many decades. And the kind of report that we are now required to do, which talks about a lot of explanation as to what the auditor has done in reaching its opinion, is a very significant and a paradigm shift in the way the reporting is approached by the auditors. The communication with of the audit results currently is happening with the board of directors, with people who are governing the entity, rather than with the investors and the shareholders and people who receive the public report of the in terms of the financial statements. So this is a reporting which is going to a different level. Currently, the auditors are communicating a lot with the board of directors, and in terms of what they've been doing in terms of audit, what are the risks that they face, and how they're addressing those risks, and et cetera. But if this reporting is going beyond the board of directors to the shareholders in terms of the formal audit report, then is going to impact in a very big way how the stakeholders look at the audit process as a whole. So I'll give you a little bit background because this is the first time, I think 2.5 years back in 2015 December, the ICAP organized the first seminar on the auditor's report, and after that nothing much happened in terms of the roundtables and seminars and etc. But now I think since SCCP has finally issued the regulation or auditors reporting incorporating the new standards, there is now a new awakening on the kind of work the auditors and the boards and the audit committees have to do urgently to meet the requirements of the regulations and the standards. So, my presentation is actually is divided into major two parts. One is what the standards are telling us to do, and what are the requirements or the key requirements of the standards that needs to be complied with in auditors reporting. What is the change and the background to those changes? And the second part, which is more important, is how we should approach that in practice, and what are the practical implementation challenges, particularly in the environment of Pakistan, and the regulators' attention to those matters, and not only the regulators in terms of the SECP, but also the regulators which are, say, tax authorities and other forums will look at the auditor's report, and how the auditors will be exposed to the public scrutiny arising from the extended auditor's reports. So the first, I think, the background, it all started after the 2008 financial crisis, when we saw a lot of changes, not only in the auditing standards, but a lot of concerns around the accounting standards, the governance standards, and a lot of changes occurred since then in those standards. And also, the auditor's reporting was also something which was subject to a lot of scrutiny by the investors, by the regulators around the world. And it was felt that the kind of a report that we do, which is a pass or fail kind of a report, that whether a company, whether the financial statement give a true and fair view or not give a true and fair view, is not meeting entirely the requirements or expectations of the investors from the auditors. So the communication value of the auditor report needs to enhance, needs to increase, and the auditors should be communicating more based on the insights that they gather in the audit process. The auditors certainly gather a lot of information, they'll do a lot of interaction with the management, and what they report is a very concise opinion, the overall opinion on the truth and fairness of the financial statements. What they do not communicate to the stakeholders is how and what matters, what issues, or what critical problems they have faced in reaching out to that opinion. So the pass or fail kind of a report was challenged, and concerns were raised that the auditors should be asked to report more and to be more transparent about the audit work they have done in order to form an overall view and opinion. So that the basis opinion should be elaborated in terms of the key audit matters and etc. So this was the thought process behind the changes in the standards that we are looking at. So in January 2015, IASB came up with a new set of auditor reporting standards. It is not restricted to one standard. There are multiple standards which were changed because they are all interlinked. So there are many significant enhancements which were made to the auditor's report. So the one-page report now has moved to about 6-7 pages describing what auditors do in reaching to their ultimate opinion. And as I said, I think the most central and focus of those changes is the key audit matters reporting. And I'll come to that in a bit to have a very close look on what key audit matters we are talking about and how they should be reported, what are the requirements around that. But before that, let's have a look at the overall changes in the auditing standards. Technically speaking, there's a new standard which is ISA 701, key audit matters, which talks about the requirements around the key audit matters, what to be included in the key audit matters, and how this should be treated in terms of the auditor's reporting. There are other standards which are related to that, like modification, the auditor's report, in what situations qualifications or disclaimer or adverse opinions are to be made, and how they are linked to the new auditor reporting standards and the key audit matter reporting. Especially, there are a lot of confusion around the emphasis of matter paragraph that currently the auditors used a lot in many situations. What would be the status of that emphasis of matter paragraph now when we have the key audit matter reporting as well? Whether we still can make an emphasis on matter paragraph, or the key audit matter reporting will be sufficient to discharge our responsibility in terms of the emphasis on matter area. So that is a lot of confusion and a frequently asked question. ISA 570 going concern is a very, very important and vital area and consideration for the auditors as well as for the management. And the standard has been improved. A lot of new requirements and a lot of new clarifications have been made into this standard, and there is an enhanced reporting also which is required around the going concern also. Other information, the standard which deals with the information which is contained in the annual report other than the financial statements, like director's report, chairman review, analysis by the management, etc. and etc. What are the auditor's responsibilities in terms of those information? So there is the standard was always there, but the reporting of the work that the auditors do regarding other information is something which has changed in that standard. So all in all, these standards have become effective by ISB for periods starting on or after 15 December 2015. But due to our own laws and regulations, the company's Ordinance 1984, which contains specific forms, Form 35A, B, C, etc. of auditors reporting, we could not implement the standards in the way they should be implemented, and therefore a legal change was required in the act, in law, to incorporate the requirements of the new standards as per the company's law, which happened with when the Companies Act was passed, and as a result, all the changes which were required to comply with the new standards were made in terms of new forms which were issued by the SECP. SECP in fact issued a new set of regulations which is called Auditors Reporting Obligation Regulations. And those regulations provides illustration of all the audit reports, the audit report in the bank's financial statements, in a normal listed company financial statements, in insurance company financial statements, consolidated financial statements. So all reports have been illustrated in those regulations. That is the SRO, which is dated 26th of April 2018, which now is the basis, the legal basis for the statutory auditors reporting in Pakistan. By and large, all these new forms which have been made as part of the regulations are in compliance with the auditing standards, because ICAP provided a lot of input in making those regulations. There are certain exceptions, there are certain additional requirements as well, over and above, which is required under the auditing standards. And I'll tell you what are those additional requirements which still have to be complied with, which are otherwise not required on the auditing standards. Why those requirements or reporting requirements have to be complied with is because of the Company Act, which requires or obligates the auditor to provide additional opinions, for instance, on whether or not the company is maintaining proper books of account, whether all expenditures have been incurred for the purposes of the business. Now these are quite strange things, because it is a lot of onerous obligation on the part of the auditor, because when you use sentences like whether or not all expenditures have been incurred for the purposes of the business, now it is not clear what is expected from the auditor. Are we supposed to look at each and every expenditure, or are we talking about some materiality here? So the language is not something which is which is very comforting, but still, because it's part of the law, and I know despite a lot of effort put in by the ICAP to convince SECP to make changes in those statements, I think SECP is not agreeing to the proposals of the ICAP, and they are more of the view that those statements should be continued like the way they are. But in any case, the auditors reporting under the ISAs is on top of it. So currently what we have is a mixed plate. We have what is required to be reported under the auditing standards, and we have certain additional legal requirements which have to be complied with, so certain additional opinions to be given by the auditor over and above the true and fair view. Now this is the technical background of the changes. Now let's look at the key changes which have been made through the auditing standards in the auditor's reporting. The first and foremost is the key audit matter. The key audit matters are those, as defined as, are those matters that in the auditor's judgment are of most significance in the audit of financial statements. Are of most significance in the audit of financial statements. Now that is inherently very judgmental, because what is significant is something, if you go to the dictionary meaning of significance, significance is something which is noteworthy, which is something important. And when you say most significant, we are saying most important, or we are saying area which is more in focus of the auditors. Now, practically speaking, there is a lot of issue or there's a problem in identifying what is most significant sometimes. Because there are matters which are significant, there are matters which are more significant, and there are matters which are not significant. But you have to plot all the matters into these, in terms of their significance, into different categories, and then decide what you want to report as an auditor, or what would you like to report as an auditor as a key audit matter. So identification of key audit matter is, I think, is very, very critical, because it demonstrates the auditor's thought process about the audit, how the auditor has identified the risks associated with the audit, what in the auditor's judgment were the most important areas to be looked at in reaching the overall conclusion. So it's not the most material item of the financial statements. Is actually the most important area which require most efforts by the auditors to address the risk associated with that item. So these are areas which require a lot of judgment sometimes. So areas where the management makes judgment, estimates, areas which are subject to uncertainties like litigation and contingencies, areas which require expertise beyond the auditor's expertise, like actuarial valuations or valuations of assets and etc. So there is a guidance provided in the standard that what are the consideration or the factors that needs to be considered in identifying the key audit matters, and I'll come to those considerations as well. But as I said, inherently it's a very tricky kind of an exercise. Now, the second, we'll go more into detail on key audit matter. I just wanted to give you a stock of what are the key changes or enhancement in the auditor's report. The first one is the key audit matter. The second one is on the going concern reporting. The going concern, as we all understand, is an area which requires a lot of auditor's judgment, and particularly when the entity is facing certain uncertainties or situations where the going concern is questionable. And those situations are then mitigated by factors or plans provided by the management, where the management says that yes, there are issues, we have liquidity issues, we have issues with the management, we have high turnover of employees, we have regulatory problems, but these are the mitigations which are available, and that's how we plan to move forward. And as a result, we feel that we should be able to continue or sustain the operations for the foreseeable future. And the foreseeable future is typically a year period after the balance sheet date. Now that situation is certainly very judgmental, and when there are indications around the going concern, the auditors have greater responsibility to evaluate the management plans and to understand what are the uncertainties inherent in those plans, and what is their view around those uncertainties. The problem with the going concern reporting is that whenever, as auditor, we feel there are indicators of going concern, we have more push towards putting an emphasis of matter paragraph which describes that there are material uncertainties on the going concern, and because of those uncertainties, there is a significant doubt that the entity may not be able to continue as a going concern. My problem is, I think we are doing it more than when it is required, because I think I have seen a lot of situations where going concern emphasis para is used, but these companies survive for a number of years and still surviving. Our mindset somehow is, in practice, people who practice auditing, is that whenever there are indications of going concern, let's play safe and let's put an emphasis of matter paragraph. Whereas emphasis matter paragraph is required in a very critical situation when you conclude there is a real material uncertainty about the going concern. And this is a net risk, which means that you first need to evaluate what are the triggers or what are the indicators which raise doubt of the going concern. Then you evaluate what are the management plans and mitigating factors available. And on a net basis, if there is a residual risk, and that residual risk is still material, then you conclude that you should give an emphasis of matter paragraph describing that there is a significant doubt on the entity's ability to continue as a going concern. Now, in doing that, you have close call situations. Close call situations mean when you have indicators of going concern, but those indicators are mitigated to a larger extent by the management plans. And in that situation, you take a close call that yes, as a result, the net residual risk is not material enough for the auditor to give an emphasis of matter paragraph. The new standard requires that even if you face those close call situations, you should evaluate the disclosures provided by the management in the financial statements. So you are not obligated to give an emphasis of matter paragraph, but you have a responsibility to evaluate what level of disclosures have been made in the accounts to describe the uncertainties around going concern, and also elaborate on what are the management plans to address those uncertainties. And as a result, if the material risk of the going concern is mitigated, then you may conclude not to give an emphasis on matter paragraph. But the close call situations should be described or addressed to a very elaborated or detailed disclosure in the financial statements. So in a situation where, for instance, there's a company which is facing a lot of business issues, there are losses, there are liquidity problems, but there is a management plan to revive the company, and if the auditor is convinced that that plan can be put in place, there is a finance available, the lenders are willing to support, the restructuring of the loans have taken place, the new business model that the company want to put in place looks viable, etc. and etc. And as a result, if the auditor believes that the going concern issue is largely mitigated, and for the foreseeable future, the company would not be compelled to liquidate the operations, then you may decide to just evaluate the disclosure rather than giving an emphasis on matter paragraph. But if there is a situation where you still believe, no, the management plan that has been shown to you, again, is subject to a lot of uncertainties. It's not clear whether lenders will provide support or not. It's not clear whether the government will take certain actions which are required in the circumstances, whether the tax authorities will provide or will take actions as you anticipate, etc. and etc. So the management plan itself is highly uncertain. In that case, you may decide to give an emphasis on matter paragraph that there are material uncertainty. Now, what is going concern is also important to consider. Going concern means when a company or an entity will have no practical alternative but to liquidate its operations. So the auditor has to foresee whether the company would be compelled to a situation in the next 1 year that it will have no practical alternative but to liquidate its operations. It's a very, I would say it's a very kind of a extreme situation that a company would have no practical alternative but to liquidate in a 1 year's time because the circumstances are so serious. So what the auditing standard now requires is that in case of close call situation, a disclosure should be made. In case where there is a real material uncertainty, then a paragraph, like the way we do in emphasis of matter paragraph, should be inserted, but the paragraph should not be labeled as an emphasis of matter paragraph. The paragraph should be labeled as material uncertainty regarding going concern. Because, so the investors or the users of the financial statements and the auditor report are alerted with that kind of a situation which is so serious that it should be tagged as material uncertainty about the going concern rather than with the heading of under the heading of an emphasis of matter paragraph. And then there are sections of the auditor's report which should talk about auditor's responsibilities and the management responsibility. Management has responsibility to make an assessment about the going concern. In the auditor's report now, under the management responsibility section, it has to be stated that the management is responsible for making specific assessment about the going concern on a yearly basis, and those assessments have been made. In the auditor's responsibility section, the auditors have to it has to be stated that the auditors, while performing audit procedures, have specifically evaluated the going concern assumption and its appropriateness in the circumstances. So auditors' responsibilities and management responsibilities should be described as part of the auditor's report regarding the going concern, just to emphasize its importance. So that is about the going concern. Other information in the auditor's report now, currently also, there is an auditing standard which requires the auditors to consider the annual report, the director's report, the management analysis, which are contained in the annual report along with the financial statements, and to ensure that the information provided in those reports are largely consistent with the financial results and the financial statements and the auditor's understanding of the entity and the knowledge the auditor have gained as a result of the audit. So the check of consistency is still required, but also the auditor is required to report that as a result of those procedures that they've performed on other information, whether they found the other information as consistent or not. So an explicit statement has to be made in the auditor's report that what is the outcome of the procedures that they've performed on other information in the report. So they have to state that whether the information is consistent or not consistent. So this is a reporting of the work that we as auditors are already required to do, but an explicit reporting of the same is now required as part of the auditor's report, which again will have some practical issues because of the timing at which that information is provided to the auditors. Normally, this information is provided very late to the auditors, and now because of this explicit reporting, maybe it is more important for the auditors to understand the process behind preparation of those reports and to be involved much more earlier in reviewing that report or other information which goes into the annual report. As I said, I think there are other key areas which have enhanced in terms of reporting, like responsibility section of the auditor's report. Now, there is in the previous audit report version, there is only one paragraph which describes in a technical jargon the auditor's role and responsibility and scope of the audit. That has been extended, and there are now, I think, half a page on the auditor's responsibilities which describe the entire process of audit, right from assessment of internal controls, substantive procedures, going concern procedures, and et cetera. So the audit process has been described in a very detailed way in the auditor's report section, as opposed to previously when the auditor's scope and the role or the auditor responsibilities were described in a very short and brief way, as limited to only gaining evidences around financial statement disclosure and reviewing internal controls. So again, the idea or aim is to communicate more to the stakeholders about the auditor's work, to be transparent as to the work that we do, and to provide more communication, because there is a lot of understanding gap. There's what we do as auditor, is not well understood by many stakeholders. If you talk to people who are regulating businesses, regulators, if you talk to, say,